May profits be upon you. Welcome to another weekly Forex forecast. Happy 2026. Let's make this the best year we ever had. That's what I'm talking about. Anyway, let's look at the economic calendar ahead for the Euro USD. Listen, nothing really Euro stuff, just some Italian bank holiday on Tuesday. Nothing major. But the USD side, yeah, non-farm employment change, that's non-farm payroll right there. That's happening on Friday. We want to be wary of that. In these kind of weeks, usually the best trading days are Monday, Tuesday, and Wednesday. Thursday, you might see some consolidation because of the next day expecting numbers, and the market wants to hold tight until they see those numbers, right? That's what tends to happen. But you can trade every day this week, and just be careful. Just know that there's going to be an injection of volatility around those news days. Wednesday is going to be a good day for the US dollar in regards to volatility, because we got ADP and jolts and that kind of stuff. Now, let's look at the Euro USD. Now, if you haven't seen the USD video that I've already put out today, where is it at? That's not it. Boom, bap. Okay, that's not it either. God dog it, man. I can never find this thing when I want to. There it is. All right, US dollar weak, but maybe strengthening. I want you to go check that out. But in that video, I'm tending to look for some strength in the US dollar, which would mean what in the Euro USD? Some weakness. All right. Look at the monthly. All right. What you can see, I'm not going to spend a lot of time on the monthly here. The last break of market structure was here. All right. This is a bearish break of market structure here. This is the high that made this low. All right. Everything in between is within this range. Any movement in between is internal action. You understand? These are the external uh, 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 the external liquidity points, all right, external structure, the highs and lows, all right, because it created a break of market structure. You understand? This is a big old BOS, and that means we are bearish. Even though this is moving up, all right, internally, we are bullish. But swing structure wise, we are bearish. You understand? This was a low, lower high, internal, lower low. All right, that was the last thing. This could be a potential lower high for the next lower low. Potential. Follow me, follow me, follow me. All right, just try to hold tight with me. All right, now being that this is the high here and the low here, we use Fibonacci retracement tool to measure this pullback. You understand? This is the pullback, a correction to this impulsive move down. This is the correction to it. You understand? All right. And when does the correction end? Well, we look for where it could end, where the potential is. You see this movement up here, this movement up here. This made the high here. This last sweep of liquidity here. This is the last sweep of liquidity here, and we didn't take that low out. We didn't take the high out, and then we took the low out. This created an order block, a bearish order block. And if we stretch that all the way over here, we are in the area where things could change. You understand? I hope you follow the logic here. All right. At that high, this is a protected high here. All right. And you expect this correction. And the Euro USD saw the strength come into it at the beginning of 2025. All right. And then we saw the consolidation here. Now we're getting down to it. You followed me up to this point, right? Could we see a potential turnaround? There's potential for it. Why? This area up here is the OTE, the optimal trade entry area. That's why we use these Fibonacci retracement tools to measure the pullback. And here is where optimally you will find the market may turn around as soon as it gets above the 50% of this trading range from this high to this low. As soon as it gets above the 50%, that's when I start looking out for a turnaround. All right, a reversal if there's going to be one. All right, the market could continue up higher and take out this high. It very well could, but you look out for it. You keep an eye out for it because it tends to happen more oftentimes than not. All right. And what do we have here? We have these higher lows here, and uh, the higher highs aren't really. We got this last higher high here, but we could be seeing a pentagram, a pent. Uh, what do you call this thing? It's like a ascending triangle here, but uh, what do they call this? This is like a flag of some kind of bullish flag. A pennant is the word I was looking for, like a pennant. All right, if those are the trading patterns that you use, that's fine. All right, I just wanted to give you something recognizable. But for me, what it represents is I see higher lows, but I don't see the higher highs coming in. That means we're losing momentum, and that leans towards a possible turnaround in our future. Now, in the look at this, I wrote some notes. The momentum has stopped. I mentioned the OTE, but there's a potential bearish order block here, right? Where would I see that order block? Where would I see that order block? Well, if the market, uh, let's see, the market breaks this high here, it'll be overcoming this bearish, what do you call it? This bearish candle here, this strong bearish candle here. We got two candles going up. We saw it take the high, but it swept the high. It didn't trade through that high. If the market takes this low down, if we swing, if we close a bearish candle down below this low, and that's a month long candle. We got a long time to wait for that. That could be an indication that the market is going to continue low. All right, so we don't just jump into shorts from here. All right, that's all I'm saying to you. All right, okay. Now we have a sweep of the highs here and no sweep of the lows as of yet. This is a lot of bearish, not bearish, but sell side liquidity that the market could come and get. All right, something else that would make us lean towards looking for a possible reversal here. All right, all right. Now let's look at the weekly time frame. What do we see here? Oops. Okay. What I want you to see is we had that sweep. That was a deliberate sweep, a clear out of all buy side liquidity in this area at this high. And then we started to see the market go back into consolidation, but it's a grinding, consolidative move to the downside. All right. And we didn't go down to the low here, right? We didn't sweep that low yet. What we did was we stayed within, the market ranged between these highs and lows, right? Now, so we're in consolidation. Do you want to take shorts into a consolidation? No, not like that. Not just willy nilly. And there's no reason to take longs just yet. All right, because the last weekly candle close was a bearish candle. All right, you want to take a buy now? No, not me. But what we can see is this bullish fair value gap here. All right. It is unmitigated. All right. And if the market comes down here, there's a good reason to believe that it may find support for higher prices to continue along the prevailing trend, which is up, on the higher time frames. All right. But again, we are in a consolidation. All your little technical uh, uh, markings and whatnot aren't going to mean much in a consolidation. The market could will zip right past your order block or your fair value gap. So be careful of that. All right. The best thing to do is to wait until the market gives a close and we see a sure enough breakout, uh, either up or a close down here, which would mean we'll probably be going down. You got to watch out for fake outs, but that's the best way to handle consolidations, right? If we get down to the in the weeds of it, yeah, there's a bullish fair value gap here, and there's reason to believe it may find some support there once it gets down there. But we have to acknowledge that that is a bearish candle close from last week. All right, the momentum isn't up. You understand? The momentum is not up. All right, and I want you to also acknowledge that this high and low is within the high and low of the previous weekly candle, which makes this an inside bar. And you see inside bars when you start to see when the market starts to change direction. See how it goes up here, all right, and then we get this inside bar right here. It's inside that high and that low. We got an inside bar in an uptrend. We get an inside bar, and then it starts going down. Okay, it's just an example. Just an example. All right, look at this one inside bar. What happened before it? High, low, well within that range, and then we start going up. Okay, that's all I'm saying. So you got to look for little clues like that. If the market comes down here, I'll be happy to look for a change in the state of delivery on the lower time frames. Then I'll look for longs. But right now, I'm holding off on looking for longs. You understand? Let's go to the daily. What do we see on the daily? What we see is a potential uh, 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 order block being formed. I'm going to show you. All right. See the strong move up? See the strong move up? We get a close below that low and the strong move up, which took liquidity up here with this high. All right. Uh, we get down here and we get a close. If the market, and I do believe that market is coming to that low, so it can mitigate that order that fair value gap that I pointed out on the monthly, and on the weekly. Sorry, uh, we're going to get the formation if it closes convincingly. We're going to get the formation of an order block up here. All right, and this becomes these down closed candles. That becomes a break a block, and price once it trades below it and closes below it, it could come back to it to retest and use it as resistance for for further movement down, for further declines. You understand there's potential for a move down here, and you can see that there is momentum heading downwards, and it looks like we are going to get that completion of that move towards mitigating this weekly fair value gap. Now, what is the point of this move? It can come down to this fair value gap here. It could mitigate this fair value gap here. It's not a straight line, I'm sorry. All right, it could mitigate this fair value gap here on the daily. All right, this is a daily fair value gap. This one is a weekly. But what we could end up seeing is in the short term, movement down as the US dollar gains strength in the near term. And then we can see that move come back up. Okay, that's what I'm saying. All right, this could be a near term move, a short term move. All right, I'm going to make sure we see this bullish fair value gap here. All right, that is a daily fair value gap. And the market could come on down there and mitigate it, and then use it for support for higher prices. There is an order block here, folks. That's why we have that displacement there that confirms and verifies this is an order block here. And the market could very well zip and then bam. All right. So we'll see what happens when we come into contact with it. Okay. Outside of that, I think we're heading down. I think we are heading down, and doesn't mean I want to take shorts from here. It does not mean that. All right, but if there is a significant close below these this low here, you can see there's a bullish fair value gap here. I should have pointed this out earlier. There's a bullish fair value gap here that the market just ran through. All right, what happens when that happens? It inverts. It inverts, and you can see that on the next candle, we see that the market tested and it used it as resistance, and we are heading down, closing below the low of the previous Thursday candle, the previous candle. All right. So I think we have momentum to the downside. And this area here, this area here is where we'll find support. And I'll look for it on the lower time frames, and maybe we can get a nice long trade down there. But it's shorts from here, in my opinion, for those guys that are looking at scalping, and for those traders, the day traders, you want to take 5 minute, 15 minute max trades as the market heads down towards there. All right, that's what that's my outlook. Okay, I hope you enjoyed that. Make sure you go back and check that US dollar index trade. I mean, what do you call it? That video. And I want to make sure you see that on the US dollar, it already violated a bearish fair value gap here. All right. It violated that bearish fair value gap. So that's why I'm thinking it's hinting towards strength moving up higher. If we take and close above that high, then I'll be looking to buy more dollar. That means I'll be looking to short the Euro USD. And that is my final word on that. Why are you taking so long? I don't know. But we violated here, and we you see it's already tapped that inversion there. So we're heading down into what could be a good setup for us for the for longs. Anyway, I'll see you in the next video, which would be the pound USD, and I'll see you there, and may profits be upon you.